What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Irene Zhang, and how are you doing today, Irene?
I'm doing great.
All right, awesome. I got some great news for you, Irene. I don't know if you were aware of this, but today we are joined by my very favorite member of the audience. And why is my favorite audience member here? Well, it's because this is a chance encounter where I interview commercial real estate players. That means buyers, sellers, deal sponsors, investors, operators, all that kind of fun stuff. And you might ask yourself, why are you doing that? And the answer is if you've ever been involved in an off market commercial real estate deal, these are the private ones that you're not supposed to publicly discuss, then you should know that the SEC requires that you have documentation of your prior substantive relationship, or else the SEC will get ants in its pants, and nobody wants that. So we got to know level of sophistication, appetite for risk, core competencies, and all that kind of fun stuff. And the benefit to you for watching is you will learn how to more effectively communicate on the subject of a commercial real estate deal and understand how my guest fits in. But before we get too excited about real estate, Irene, do you want to say a thing or two about yourself and your cat?
Yeah, hi, audience. This
Hey,
is my
kitty.
cat. So my name is Irene Zhang. I was born and raised in China and came to the States about 11 years ago. Right now, living in the San Francisco Bay Area. Prior to becoming full-time investing in real estate and buying businesses, I was working in Silicon Valley as a director of product marketing. And now I'm full-time into real estate and businesses, focused on private equity as well as real estate, especially in the multifamily space.
I love that answer. I love that answer. And the first section that we always go through, it's on the distinct motivations. Before that, I gotta say, but wait, check your eight. Irene, with where you're, I'm not sure where you are with technology, but can you see through the camera and down there into the user's device? There might be this hideous subscribe button down there, and maybe they want to do something. Okay, it's a stupid joke, but whatever. The distinct motivations. I've now spoken to, we've done over 300 of these interviews already. I've probably spoken to at least 1,000 different commercial real estate syndicators, investors, and whatnot by this point. And everybody has their own unique why, but I found that they fit pretty neatly into these five different categories. And the reason why it's important to know people's motivations when you're going to be getting involved in these deals is because they take months to close. They take years to go a full cycle, and we need to know what's going to keep somebody from throwing in the towel. And I found that they really do fit neatly into these five different categories, so I go through them in every episode. The first motivation is preservation of purchasing power. What's that? Well, some people already have a portfolio of assets, and the way that they pay their bills is from the proceeds of ownership. In other words, the profits. So they're job optional. But you might ask, well, if somebody doesn't have to work, why would they go through the hassle of making another acquisition? Well, there's a couple scenarios where that's more likely. One of them is if inflation is rearing its ugly head, that's going to eat away from the purchasing power of the cash flow, so it's going to be time to make a new acquisition. The other time is when there's heavy distress or an asset crash, so you can buy at a steep discount. Now, everybody should try and buy at a steep discount, but people in this position, they're definitely not going to make their acquisition unless they have that baked in appreciation from buying cheaply. Now, full confession, full disclosure, I'm not to this point in my journey yet. Where I'm at is trading time directly for wealth. To give some background to that, I also have a background in technology. Specifically, it was the CRM industry. So we were sending 5 to 7 million emails a month. And I was on the credit card transaction side of all of these different web applications. And starting in 2014, I started doing that for a real estate company based out of Ohio that had been doing 10 transactions a month. So this is 10 single family house flips per month. They were doing that for years before they hired me. And when I was looking at what my boss was achieving, not only from a salary perspective, but also from a wealth building perspective, it hit me that I needed to pivot from trying to get an ever bigger salary to getting rewarded for my effort in the form of little slivers of deployed capital, aka equity. So that's why I'm involved in this. And I get that that's a little too subtle for some people, especially youngsters. Youngsters' motivation is usually they want to hustle like crazy now so they can retire early. But this motivation right here, it really means that people want to take control of their schedule. Maybe they want to not retire early so much as work fewer months per year or fewer weeks per month, something like that. And that's what they're up to. Now, one caveat to people who want to fast track retirement or control their schedule, I believe that many people who choose this one, they think that everybody is secretly hoping that they can retire and not work anymore. But I assure you that is simply not the case. Some people are fueled by ambition. They want to buy their entire hometown. They want that generational wealth. They want to make sure that their great grandchildren never have to hold a day job just because they hustled into their 90s. And I get that in some circles, that sort of mentality is vilified, but you have to understand if you are building teams of people, you need people who are going to hustle into their 90s and they're not going to throw in their towel on a moment's notice. So that's why these guys are really great to have on your team, just like this last group, but they're not so much focusing on the generational wealth so much as they picked a sector of society, or maybe it's the environment, maybe it's animals, who knows, but there's a financial component to making a really big impact, and that's why some people are making their commercial real estate acquisitions. So Irene, of these 5 different motivations, what combination of them would you say describes you best?
For me, it's actually a combination. So for myself, where I started into the real estate is because I want to achieve financial freedom.
Mm-hmm.
And and then as I start getting to multifamily and as a capital raiser, where my motivation comes is I want to help people who need it, that having the access to the investment opportunity that help them build generational wealth, that help them reduce their tax bill, that help them to be able to spend more time with their family and do things that they like at their own choice.
Mm-hmm, mm-hmm. I love that answer. It's so encouraging, and like honestly, that's one of the things about motivations, and what I find refreshing about this format is giving us that reminder of what we're doing it for in the first place. But it's pretty easy to sound overly naive or optimistic when you're talking about motivations. And one thing that jumped out to me when I started getting involved in these private deals, if you've ever been involved in a 506B syndication, whoever the securities attorney in the mix was, and there better have been a securities attorney in the mix, otherwise you should be running. Don't just walk away, you should run away from that deal. But the securities attorney in the mix should have insisted that everybody fills out this highly invasive financial questionnaire. Sometimes it's called a suitability questionnaire, and it's a whole bunch of different questions about your finances. But when I was going through one of these questionnaires, the one question that jumped out at me as far as it lacked utility, it was the tolerance for risk assessment question. I thought that I couldn't really use any of the answers in anything useful. So I made my own one, which is a fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. So Irene, it can be inside real estate, outside real estate. What's too risky for you?
For me, invest in a single startup that the only exit that they are anticipating is IPO. That will be too risky for me.
I love that answer. I love that answer. It's so specific and so poignant. It's you really don't know. It's like it's an appreciation move, and you have to hope that the systems are in place for you to even succeed. So yeah, as the tech co-founder in a few different things, yeah, I love that answer. But let's get on to the next section here, which is on favorite deal metrics. And to be completely honest, I actually did not include this slide here for the first couple hundred chance encounters, and there's a big reason for it. Some people in this industry, they are the public relations, they're the front of house, the face, the marketing of the real estate deals. And so as a result, they're not going to be spending all their time looking in spreadsheets and tweaking numbers and figuring out what the business plan is going to look like. But I found that even the people who are just front of house, they're going to have a few different metrics that they focus in on to figure out if a deal really has legs or not. And for anybody in the audience who is listening and not watching, I read out the 14 different metrics that are on here. This is not an exhaustive list. So some people, they have an extra metric or two that they rely on. But here's the ones that I have up here for people's references. The first one is cash on cash, then IRR, then cost per door, then NOI, which is net operating income. Then you have the going in cap rate, which really is important as far as how does it compare to the going cap rates for commercial properties in that area. The next one is loan interest rate. That's especially important if you're going to be assuming it. Then there's the occupancy, which is the inverse of vacancy, but it's the same thing, just inverse. Then you have average income where the property is located. You have amortization period of the loan, also especially important if you're going to be assuming it. Then the difference between the market versus the in-place rents. And then there's the population growth where the property is located to have some baked in demand or appreciation right there. Then there's the sponsor record, which is how many deals have already gone full cycle and how many are on the go right now. Then there's the waterfall split or exit strategy, which is what happens to your investment after your capital has been returned. Then there's DSCR, which is debt service coverage ratio, which means how much of the money is going out the door from revenue in the form of the costs for the loans. So Irene, as I mentioned, I know that it's not exhaustive. So if you have a number that you focus in on that's not on there, go ahead and say it. But what's your top three or something like that?
First and foremost, I look at the sponsor, especially the lead GP. Track record is one, but also it's about the person's character and integrity, because there's no deal that always go as planned and no challenge at all during that 3, 5 years, 7-year whole period. There's always things come up. It's the person that is in a team, whether they will throw in a towel and run away, or will they actually roll up sleeve and solve problem, right? So that's the number one most important. And second is it's not in this, and it's not necessarily quantifiable per se, but I prefer working on projects that go beyond just economic factor. I prefer something that have the intention of doing good for society. So whether it's you open up the supply for first-time home buyers, or that you intend to improve the quality of life for the residents, or even like certain projects that convert hotel to apartment, again, open up the supply. Some of those that have the intention to improve the local area for the people, that is something that is add value in my book, that I would more likely want to help and support those projects. I think those two are the most important. And then the rest is more as due diligence to making sure the risk levels are appropriate for my investors.
I love that answer. I'm eating it up like a delicious subscribe sandwich. That's subtle, isn't it? It's really quite something. But it's the way to remind me that it's time to bring out the Dan Does Deals Commercial Core Competency Cube, which has the 6 different roles in a commercial real estate deal. And Irene's already mentioned a couple of them. But the main reason why I go through this in every episode is twofold. The first one is so that you understand how my guest fits into these deals, but the other one is to help you more effectively communicate on the subject of a commercial real estate deal and the rules that are inside it. And if you're looking at this cube and going, wow, I need to get me one of those, the great news is it's free. You can go to dandoesdeals.com, and I actually committed the cardinal sin of marketing, which is you should never give away your freebie without asking for some sort of contact information. But if you go to dandoesdeals.com, you'll notice there's this big old button, and you can just click on it and download it and print it out and practice it on your friends and family. And that's because I want nothing in the way from you becoming more effective at communicating on these deals, because I do think your future in this sector is going to hinge on it. So let's get started. The repositioners are the most front-facing people you'll generally see in this industry, the people who are making the acquisitions, they're vetting the deals. What are they up to? Well, they look at a whole bunch of different properties to find the one that's worth going for, and they do a whole bunch of paperwork. The paperwork is called underwriting, which means they're doing the math. They're figuring out, first of all, is this property even making the amount of money that the seller slash broker claims it is? Because okay, so the repositioner has to be able to see through that and also figure out how can they make the property make more money? How can they find more upside? Now, the most peculiar aspect of being a repositioner is there's a lot of financier relations. So investor relations, just basically having relations with different lenders. And the reason why it's so pivotal for a repositioner to have a vast network of financiers is because if you can secure a more advantageous loan, that means the property is automatically more profitable. Okay, so that is why you need to be talking to lots of people who only deal with paper, money, and the owners of the property. So that's what a financier is. But the next place a repositioner looks is to operations. And one thing that if you're going to be a repositioner, you're going to be a GP, you have to have some contribution to the operations team, which probably means finding more efficiencies, getting those Benjamins to stop going down the toilet. And of course, there's other parts of operations. If you're like me and you tend to focus on properties that are on the bigger side, like 100 units or more, you probably are going to outsource the property management to a third party, but you still have to have some sort of qualifications or contributions yourself. Me personally, when I contribute to operations as a member of a GP team, there's the online web assets, like any websites or social media that need to be taken care of. That's something that is in my purview. But the bigger one is if you understand real estate in general, you'll understand that vacancy is the real enemy. So if that being the case, even if you are outsourcing your property management, somebody on the GP team is going to need some serious marketing chops so that they can combat that vacancy. And that's what I contribute when I'm on a GP team. But of course, there's only so much you can do with operations. So the next place the repositioner looks is to get a contractor team involved to upgrade the property, to make it a nicer place. The idea being that the future residents would be happy to pay more in rent than the previous ones because it's a nicer place. But if only it were that simple. You can spend endless amounts of money on contractors. You can go ahead and have the toilets all gold plated, but you're not going to get a return on investment. And you also aren't going to, well, I guess I should put it this way. I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground to make sure that the contractors aren't dragging their heels or using substandard materials and that sort of thing. The locals are also making sure that the operations team are telling the truth. They're not giving phony photos, outdated photos for things that are messed up or whatnot. So those locals are a pivotal part in the business, especially when you consider that they have to be able to be there in an hour or two. And me personally, that's not going to be possible. I'd still be stuck at an airport in an hour or two. So that is just a role that I cannot serve on. But let's do a hypothetical. Let's say you become a repositioner. You get this idea in your head. You say, well, hey, I'm an engineer or a physician or an attorney, something like that. I know how to buy a house. You get your down payment and then you borrow the rest from the bank. So if my friends and we pool 100K each or something like that, I bet you we could take over that 350 unit apartment complex down the street. So you turn around to the financiers and say, hey, I want to buy that building right over there. It's going to be tens of millions of dollars. You don't happen to have, I don't know, say tens of millions of dollars you want to lend us, do you? Well, the financier is going to have a question on their mind that I haven't answered yet. And if you're in a mentorship program or you have a guru or something like this, I encourage you to listen very carefully to this next part because they tend to gloss over it a fair bit. The financiers in this hypothetical are going to say, who's your sponsor? Who's your KP? What's that all about? So in that hypothetical where you pooled your friends and everybody put in 100K or something like that, the bank is still going to ask who already owns a similar asset. You will not be eligible for a commercial loan unless somebody already owns a similar asset, because then they can prove to their depositors that you're not going to run the property into the ground with their money. So you need somebody who already owns something similar. And then on top of that, you need a certain amount of liquidity. And then among the ownership team for collateral, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So Irene, you already mentioned the investor relations part. You already mentioned the underwriting, which most people generally are some sort of repositioner in this industry as well. But what sides of the cube do you generally focus on for your next deal?
Mm.
Did I lose you there on the connection?
Uh,
Looks like you're
no, but
back.
yeah.
Yeah. So I was asking which roles. You said that you're doing financier relations, so the financier part, and then you're
Yeah,
also doing some other.
actually, for me, it's probably similar to you because my background is actually strategic marketing and product marketing.
Mhm.
So, and fun fact, I did not anticipate that, but I also happen to hold a black belt in Lean Six Sigma. So in operations, I can bring value in that.
All right. Yeah. Awesome. Good stuff. So then let's talk about the properties themselves. And the way that we usually say this to each other is what's your buy box? What's your ideal property? And when real estate people are talking to each other saying what's your buy box, we're really asking for three main things. First one's geography. Where is it? Which state, which county, possibly even which neighborhood. It will definitely matter. Second one's going to be size. Now, most of my guests on this show are in multifamily, which is apartment complex investment. And the way you define size in an apartment complex is by the number of apartment units. And the reason why that's important is because the type of group that takes over 10 and 15 unit apartment complexes, they're going to be fundamentally different from the ones that are taking over 150, 350 unit apartment complexes. So that size definitely matters. And of course, in the other forms of real estate that might go off of acreage or square footage, but that part about size is still going to matter for that exact reason. But the third one is usually called class. I prefer to call it desirability, and that's because it's two completely separate things and class is singular. The first one is condition, the second one is area. And if you're talking about condition, it's how old is the building, how beat up is the property, what sort of luxuries and amenities make it a really nice place to be, or is it a really no frills sort of location? That's the condition. But when you're talking about the area, if it is residential, then the school districts where the property is located is going to be very important. But every type of real estate, the crime rate where the property is located is definitely going to matter. And then, of course, that old trope that brokers say about location, location, location. I don't like it because they really mean traffic, traffic, traffic. If a gazillion people pass by a property every single day, it's going to be more desirable than one that's far away from everything. So that's the area. But both the area and the condition, the way that they rank them, it's the same way as in grade school where you have A plus at the top and then A and then A minus and then B plus and so on. So Irene, as far as you and your group goes, what's easier to say yes to and more difficult to say no to?
I prefer A minus, B plus, that kind of range.
Mm-hmm.
Um, and I prefer 50 units or more. Occasionally there are below, but then I really would lean into the social impact side because if it's apartment complex, that to me it economy of scale that it needs to be more than a certain unit to have a full-time on-site property manager to
Mm-hmm.
that, and I prefer that. Um,
Nice.
yeah, so those are the primary. And then in terms of state, fairly broad, Arizona, Texas, Carolinas, Ohio, those are the top ones that I looked at.
I love it. I love it. So then let's talk about people, which is actually my favorite part about this industry. It's the amount of like protectiveness that you find in commercial real estate. It's just not there. It's people are really eager because the fact is nobody's going to be all six sides of the cube for any meaningful amount of time. We all hunker down on two sides or something like that and make that our real focus. And it means that we're really eager to give introductions and make new referrals, even for teams that we're not going to be a part of. It's a really fantastic thing. But at the same time, because we have our own unique skill sets and the sides of the cube that we take care of, we're better off helping some people more than others. Me personally, because of my marketing background, all that digital stuff, I'm always eager to talk to more sponsors and KPs because they've already got the real estate business established where a person like me can make a big difference. Whereas when you're first starting off as a local or a repositioner, you need grunts who can put in 80 to 120 hours a week. And that's not how I am going to make the biggest difference to the bottom line. So that's why the sponsors and KPs are huge for me. Of course, boots on the ground to complement the fact that I'm from the internet. That's really important. And then we're ultimately in the industry of deploying capital. So always eager to speak to more financiers. But Irene, if you have any 506B deals, don't mention them specifically, especially if you're going to mention investors. But who are you best suited to help?
Um, I I love meeting sponsors and lead GPs.
Mm-hmm. Excellent.
Yeah,
Excellent.
yeah.
Yep.
That's like for me, um, partnering with them that they already have a good track record, that they know how to operate those assets is the fastest way for me to help my investors and who are, and also including people in my network that aspire to be investors, that I know that their money will be, there's no 100% guarantee, but is in terms of risk level, that is safer pairs of hand, that those operators are already knowing what they're doing for the most part. Yeah.
I love that answer. And so then people in the audience must be thinking, how do we reach out then? And I'm going to sandbag that and talk about myself for a second. And you'll notice that I have a pretty distinct looking last name, and that makes it really easy to find me on LinkedIn, which is where I spend most of my social media time. Of course, if you're on Amazon.com and you use the same name, you can find the different books that I have available there on different business skill related topics, including real estate syndication. But if you are going to be involved in investments or syndications, if you're going to be raising capital, especially, I highly encourage you to scan this QR code. You can pause the video if you need to. That will send you to the FAQs page of 506 BME, which is the platform where I offer the IT backup service for your documentation of your substantive relations. The idea being that if your laptop falls into the bathtub, the SEC will still require that documentation, or they're going to say it's like, oh, well, you just plain didn't have it. And that can be a house of cards for your business. So make sure that you have that buttoned up if you're going to be taking passive investors. But Irene, if people want to reach out to you, website, phone, email, social media, how should people reach out?
I'm pretty active on Facebook, Instagram, and LinkedIn. So on LinkedIn, just search my name, Irene Zhang, and you should be able to find me. Same thing on Facebook, just search my name. And then on Instagram, my handler is Irene Zhang Invest, IMVESTS.
Excellent, excellent. And I know that you also have a Facebook group that's for Asian investors, right?
Yes. So
Right.
I founded a Facebook group community that's called Asian Creative Investors Network, ACIN, and it's been growing very fast. It's intended to have groups of investors who share the Asian cultural heritage that can come together and connect and learn from each other and support each other.
I love it. I love it. And that brings me to the last thing, which is the public service announcement. And this time I'm going to spin it up a little bit different. So this is not for you, Irene. This is for you in the audience. 如果你们看这部然后一直有眼睛的酸痛，那是好像火是不是一直扫着很痛的痛，那是更头痛的那种，有可能是因为那非常丑的一个 button 叫 subscribe，你应该要按一下，这样就是那个痛就是不会不见了，就是会非常的好。那可是我跟你说，你按着那个 subscribe button 不会痛，不会不用钱，而且我跟大家这样子说，因为我想要 如果更多人一直按，这样 YouTube 会付钱给我，那我不用出钱买这些影片，然后我不知道为什么我那么害羞，我开始讲得很慢，可是如果你按着这样你有时候会看到我这些电影片嘛，电影部，然后可是你不用看它，我只是很开心你有过这些时间看这个 interview，所以我也谢谢你们。So I just said, yeah, to hit the subscribe button, that'd be nice, so YouTube pays for this stuff. But that's all I got. So thanks for joining me today, Irene. This has been great.
Thank you for having me, Dan.
Awesome. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B Me or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks
Any
a lot.
syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B Me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B Me, everybody.